Hello everyone, welcome to Indian Current Affairs podcast channel. Today we are going to discussing some of very important MCQs on Indian economy. Let's start the first question. Consider the following statements regarding free float and managed float exchange rate systems. First one, in a free float exchange rate system, the central bank never intervenes in the foreign exchange market, allowing the currency price to be determined solely by market forces. Second statement, in a managed float exchange rate system, the central bank always sets a fixed price band for the currency to prevent its volatility. So, which of these statements are correct? Answer to this one is first statement is correct, second statement is wrong, because it is not always. In managed float exchange system, in sometimes, so RBI or any central banks of that country intervene to prevent its volatility of currency. So answer to this one is first statement is correct, second statement is wrong. If you see the explanation, floating exchange rates are of two types, free float and managed float. So free float, under this system the central bank of the country never intervenes in the foreign exchange market, and the currency price is totally left to the demand and supply forces, that means market forces. For example, US, Japan and some European countries. Next, managed float. Under this system, the central bank sometimes intervenes in the market to buy and sell foreign currencies in case the domestic currency becomes very volatile. So in case of India, RBI intervenes in the foreign exchange market generally indirectly through select public sector banks. These banks in turn buy or sell on behalf of RBI in the market to contain volatility in the rupee and not to set any price band. So there is no any price band, but they contain volatility. RBI intervenes in the market. So that's why our market is managed float. So next question. Which of the following are the ways in which Indian companies can raise external commercial borrowings? So, how Indian companies can raise external commercial borrowings? So, from other countries, how they borrow? By using commercial bank loans, buyer's credit, supplier's credit, securitized instruments, foreign currency convertible bonds. So, by which of the following they can borrow? Answer to this one is in the following all the ways Indian companies can borrow the money from external sources. So if you see the explanation, Indian companies are allowed to raise external commercial borrowings including commercial bank loans, buyer's credit, supplier's credit, securitized instruments, foreign currency convertible bonds and foreign currency exchangeable bonds are governed by ECB guidelines. So they comes under ECB guidelines. So next question. Which among the following acts provides for constitution of monetary policy committee? So which among the acts constitute the monetary policy committee? So first one, section 45 ZA of the Banking Regulation Act 1949, section 45 ZB of RBI Act of 1934, Section 45 ZB of Banking Regulation Act 1949, 45 ZB of RBI Act 1934. So answer to this one is Section 45 ZB of RBI Act 1934. Under this act, with this act we can constitute monetary policy committee. So in monetary policy committee we have 6 members. So if you see the explanation, Section 45 ZB of the amended RBI Act 1934 provides for an empowered 6-member monetary policy committee to be constituted by the central government by notification in the official gazette. So the first such MPC was constituted on September 29, 2016. 45 ZA is for inflation target and 45 ZB constitution of monetary policy committee. So next question. Consider the following positions regarding monetary policy committee. First one, Governor of the Reserve Bank of India. Second one, Deputy Governor of the Reserve Bank of India. Third one, Officer of the Reserve Bank of India nominated by the Central Board. So how many of the above mentioned positions are not ex officio positions of Monetary Policy Committee? So all of them are ex officio members. That means by becoming governor of the RBI, he is one of the person in Monetary Policy Committee. So deputy governor also one of the person of Monetary Policy Committee. Similarly, one of the officer of Reserve Bank of India nominated by the central board. So all are ex officio positions. Answer to this one, none. If you see the explanation, first three members are ex officio members and next three members are selected by the central government. If you see Governor of the Reserve Bank of India, chairperson, Deputy Governor of the Reserve Bank of India, in charge of monetary policy, one officer of the Reserve Bank of India to be nominated by the central board. So member, he is also ex officio person. So next remaining three persons. Presently they are Professor Ashmya Goyal and Professor Jayant R. Verma and Dr. Shashanka Bede. So these are the members who are nominated by the central government. Next question. Which among the following instruments is not a part of money market? So call or notice money. Second one, certificate of deposits. Third one, commercial paper. Fourth one, equity securities. So which of them are not money market? Money market means so they have maturity less than 1 year. So call or notice money, certificate of deposits, commercial papers comes under money market. But equity securities comes under share market. Like there comes under capital market. If you see the explanation, money market, a segment of the financial market in which financial instruments with high liquidity and very short maturities less than 1 year are traded. Money market instruments are basically debt instruments and include call or notice money, repos, treasury bills, cash management bills, commercial papers, certificate of deposits and collateralized borrowing and lending obligations. The players who can trade in the money market are financial institutions, commercial banks, central banks and highly rated corporates. These markets are less risky. If you see capital market, financial markets for buying and selling debt and equity securities. In this market, generally securities of medium and long term of more than 1 year are bought and sold. So next question. In the recent Union Budget of 2024, Finance Minister Nirmala Sitharaman has proposed revamping of the Shram Suvidha and Samadhan portals to streamline industry compliance process. In this regard, what is the objective of the Samadhan portal? First one, to provide a unified platform for workers, unions and other stakeholders to voice their grievances, and second one, to provide platform to motivate the citizens to participate in the management schemes. Third one, to provide uniform platform for addressing the increasing worries regarding the utilization of chemical fertilizers and pesticides. Fourth one, to provide end-to-end support to artisans and craft people who work with their hands and tools. So answer to this one is to provide a unified platform for workers, unions and other stakeholders to voice grievances. So objective of Samadhan portal. If you see the explanation, Samadhan portal is a digital initiative of Ministry of Labour and Employment to make the system transparent and more efficient and to make the life of workmen or union and other stakeholders smooth by giving them a single platform for raising their grievances in the form of industrial dispute, charter of demand and claims under applicable labour laws and the other grievances related to employment. So next question. So continuation, the purpose of portal is also to minimize the confusion of workers under applicability of labour laws, to eliminate the delay caused due to offline communication at various levels and to facilitate the workmen, unions and stakeholders in tracking their matter online and for centralized monitoring by ministry to bring transparency and efficiency. So next question. consider the following statements regarding silent features of GST. So GST operates under a dual structure of the center and state. Second one, GST is a source-based tax. Third one, GST allows for the utilization of input tax credit. Fourth one, alcohol for human consumption and aviation are not covered under GST currently. So which of the following statements are correct? First one, third one, fourth one are correct, because GST is a destination based tax. So that's why second statement is wrong. If you see the explanation, destination based tax. GST is a destination based tax levied at each stage of the supply chain from the manufacturer to the consumer. It is applicable to the value addition at each stage, allowing for the seamless flow of credits and reducing the tax burden on the end consumer. So before GST there is tax on tax. So at each stage there is tax, and for the tax also tax levied. So but after GST is coming, the tax on tax is eliminated, by the end burden on the consumer reduces. So next one, arrange the following policy rates of RBI in descending order as of July 2024. First one, marginal standing facility rate, policy repo rate, fixed reserve repo rate and standing deposit facility rate. So we know policy repo rate and reverse repo rates are monetary policy systems, and in marginal standing facility rate and standing deposit facility rates also monetary policy rates. So which have less interest rates, we have to arrange them in descending order. So if you see, policy repo rate as 6.5%, standing deposit facility rate as 6.25%, marginal standing facility rate 6.75%, bank rate 6.75%, fixed reserve reverse repo rate 3.35. So first one, marginal standing facility rate, and then in decreasing order, next one is standing deposit facility rate, next policy repo rate, next standing deposit facility rate, and finally it is reverse repo rate. Next question. So it is completed. Thank you very much.